Welcome traders to another Tick Mill trading update with me, Patrick Munnelly. Want to update the S&P 500 view using the E-mini futures contract and put together a trading plan for the week ahead, looking at some potential action areas and some price objectives in terms of targets to the up and potentially downside this week. So if we start, as always, just with an overview of the macro side of things. Obviously, over the weekend, two dynamics really are in play here. We have concerns in Europe regarding the potential no confidence vote in the government and a budget not getting passed, and the implications for that with respect to the French bond market have taken the headlines this morning as Europe has come in. Seen some weakness in the dollar, weakness in the euro, and the French bonds also under pressure. And to add to the weight we've seen in the euro, President Trump has been once again out on his social media platform, Truth Social, which I guess at some point we're all going to need to download. And he has been making comments regarding the dollar and kind of flip-flopping on his weak dollar policy, suggesting strength in the dollar isn't going to be an issue with the tariffs, etc. So those are the two dynamics that are driving the narrative as we come into the week. And in terms of the data slate, we're going to get Fed speakers this afternoon. We also get the ISM manufacturing data. And you'll recall over previous months, or recent months, sorry, this ISM manufacturing data has been a precursor sometimes to some weakness heading into the jobs data, which has then been exacerbated by the jobs data, which we receive on Friday, the non-farm payrolls. So it'll be interesting to see where the manufacturing comes in today. We have the final forecast. We're looking for 49 here, the S&P global manufacturing PMI print, and then we have the ISM manufacturing at 47.8. So both of them are still sitting in contractionary territory. And then heading into Tuesday, we get the job openings. We hear from Googler and Goolsby. And then heading into Wednesday, we will get US factory orders, ISM services PMI. And we will also, importantly, hear from Powell. Powell's set to speak into the back end of the day whilst the markets are still open. So it'll be interesting to monitor those comments for some potential volatility and opportunity around those. Then we get jobless claims and the trade balance on Thursday, and heading to Friday, non-farm payrolls with a forecast of 200K, earnings 3.9% average year over year, and an unemployment rate of 4.1%. Now, obviously, the Fed have staked their mission quite firmly in respect of the health of the jobs market with respect to rates. So the volatility I anticipate we see this week is likely going to be back end loaded with the jobs data out of the US and Powell speaking on Wednesday evening. Turning to the charts on the weekly time frame, still tracking this broader five-wave sequence from the lows of 2022. We now have that 5 equals 1 objective versus the 5107, which gives us a 62.30 upside target. 62.04 is the yearly R3. So that's where I think we're ultimately headed before all is said and done for this year. And that's on the weekly time frame, obviously. And in terms of the weekly volume weighted average price, that now raises the 5-period look back to just below 59.90. 59.90 is going to be important this week, as it is also represents the implied volatility expected range to the downside. To the upside, we have 61.09 as the target, and that also coincides with a 131 extension from our 53.97. So we've got some confidence up just above 5100 handle. We're coming into the week with a bullish posture. Seasonal studies suggest that the first day of the month and the days plus or minus 2 to 3, and then heading into the jobs data have been favourable for the market. We also still have very strong seasonals with respect to obviously heading into December and the potential for the Santa Claus rally. But I do see in the near term a setup for a potential pullback, which will then put the platform in place should we see the Santa Claus rally materialise, which obviously given my target there at the above 6,200, that's where my focus is. So if we move to the weekly plan here, bull bear zone for me this week is going to be the 6,000 to 59.90. So the 59.90 incorporates the weekly volume weighted average price and the downside implied volatility target. So any moves back into that area, I'll be watching for bullish reversal patterns to engage on the long side. First target for me this week is going to be a move up into the 60.70s to 60.80s. 60.90 is today's range resistance coming into the session. And I would anticipate from there we could see a pause, a back and filling, certainly if we get that move ahead of the jobs data. And then the target for me on the week is going to be that move up into the 61.09, 61.10 area, where I'll certainly be paying attention to momentum divergence as I see that heading into next week, we could see a little bit of near-term weakness, nothing to suggest a major correction or crash, etc. But just some near-term weakness, and I can see us retesting these prior highs into the 60.50s to then set that base to move forward into the back end of the year for our tests above 6,200. At this stage, only a close back through the 59.90 would be a bearish development, setting up a move down to test the 59.60, 59.50 again. You remember those from a couple of weeks ago. That was a key area. And watching again there for bullish reversal patterns, and the first target on any reversal there would be a move up into test the bull bear zone from below the weekly bull bear zone, and then we'll see if buyers accept above there or we get rejected for the next downside target being moved back into 59.10 to 5900 area. But like I say, at this stage, my focus is on a grind higher for this week, and then heading into early next week, the potential for a bit of a pullback to set a base for the move up into the 6200s. On the intraday hourly time frame, I'm just looking here now. You can see we have a high here that's been printed. It's 60.51. If we hold there, there is an equality target to the downside at 60.28. So that would be an intraday setup. So any move that develops a test into that 60.28, watch that area for bullish reversal patterns again to engage on the long side, and we're looking to break highs. And the first objective is into that 60.70, 60.80 area. And then we look for pullbacks to test and hold support back into the 60.50s, and then up into that 6100, where I'll be updating price targets and patterns as the week progresses. So as always, traders, plan the trade the plan, and most importantly, manage your risk. Until next time, thanks very much.